Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's update our view on euro currency. So on weekend we have discussed the bearish signs on euro, despite that nominally we have the bullish trend direction. But actually, first of all, from the cross-market analysis, you could see that other markets do not support this tendency. So for instance, on the 10-year bonds, you could see what's going on. Market is coming to challenge the resistance. And that's one of the actually warning factor. We talked about this in the weekly report and said market stands at the edge of the yields breakout, which could actually start moving back to the 5%, and it will be really big pressure on the United States economy. On the nominal rates, that's rising again. So once again, the problem of the banks will appear because they have unrealized big losses on the balances, and these losses will increase as soon as the yield will start rising. And in general, this performance of the yields will be supportive for the dollar. That also explains why you could see absolutely different picture on the dollar index on euro. So on the dollar index, trend already has turned bullish. This market stands above the MACD, while on the euro currency you could see that it still holds bullish as well. So some difference exists. At the same time, the second moment that we discussed directly on the euro currency this time, that might be the indicator of the bearish dynamic pressure. So market stands flat while the trend shows the bullish direction. So market doesn't move in the direction of the trend. This might be the sign of the bearish dynamic pressure. Besides this type of action, you can see in recent first sessions, it started looking like minor flag or pennant consolidation, which is also might be treated as a bearish sign. On the full time frame chart, you could see it's better. So on weekend, we said that will be vital point for the bullish context. Until market stands above it, theoretically, it will keep chances to keep going higher. But once it will break it down, it's open road for a deeper action first back to the lows of the 103 area and probably for more extension to the downside. And currently, chances that this will happen are really very significant, just because, well, our fundamental discussion that we have made in the weekend as well has shown that actually no reasons for now for rising of the euro currency from the fundamental point of view. And it's actually results of this we could get this week, and probably actually might be accelerated in the statement from the Fed. It might be one of the major driving factors this week. Finally, on hourly chart, what do we have? Recall that let's keep an eye on the hand and shoulders. That's the point that we also talked about, especially if we would get the grabber on bullish sign. If we get the hand shoulders, theoretically it might be considered for a possible long entry. You can see that bounce was really nice, but we haven't got any grabber. And market has shown just a 50% retracement of the whole downside action. Now it drops back below the neckline. And overall price action doesn't look like really great for us. So it's very choppy and wobbling action, which is mostly stands in favor of the bearish dynamic. Minor diversion stands also here in place. So taking all stuff together, I would say that current background seems more friendly for bearish positions rather for the bullish positions. For instance, if you're searching chance to go short, theoretically you probably could focus on the small stressing downside action, wait for a minor pullback maybe, or do not wait. So it's because really very small distance here by far, and just watching for this top and this resistance as a possible point where you could hide your stops. So just watching what will happen next, because overall performance, well, that doesn't impressive, and personally I do not want to take the long position with this price behavior that we see currently. If you would like to get some more confidence, more confirmation of the bearish changings that now developing here, that's okay. So you could just wait when the market will break the lows that we have specified here. So I guess this not the correct chart, it's right there. So you could wait. This especially if you're trading on high time frames. So if market will drop below this area, we'll erase this some potential pattern that we discussed and change the daily trend in the bearish side, bearish direction. You will get the you'll get the confirmation, get more confidence, and actually then you could try to buy on some pullback. There's two different ways. So one is less conservative, another one is more conservative. So just choose what you like more. But one thing that I would like to say is that currently, personally for me, euro currency doesn't look really attractive for considering any longs.